Ever pondered how to plunge into the world of real estate investment with minimal or possibly no money? It's a question that has crossed many minds, and today we're here to show you that it's not just a dream, but a very attainable reality. Real estate investment isn't solely a playground for the affluent. It's a market that invites everyone, regardless of the size of their bank account. Many strategies exist that can help you make your first steps into this exciting world without making a hefty initial investment. Today, we will spotlight 3 specific methods that can help you embark on your real estate investment journey with little to no money. These techniques have been tried and tested and have proven successful for numerous investors around the globe. So put any doubts aside and prepare to broaden your horizons. Stay tuned as we unravel the mystery of budget-friendly real estate investment. First on the list is a strategy known as house hacking. Imagine this. You buy a small multi-unit property, perhaps a duplex or a 3-family home. Now, instead of renting it out entirely, you decide to move into one of the units yourself and rent the others out. This is the essence of house hacking. It's a clever approach that allows you to dip your toes in real estate investment waters without taking the full plunge. You're not just a landlord, you're also a tenant. But here's the twist. The rental income from the other units could potentially cover your mortgage payments and other expenses. In essence, you're living for free, or at least at a significantly reduced cost. Now, you might be thinking, but I have to share my living space with my tenants? Well, not exactly. You see, you're not sharing your personal living quarters. You have your own private unit within the property. The only shared aspect could be common areas like the yard or the parking lot, depending on the property layout. So, what are the benefits of house hacking? For starters, it's a great way to offset your living expenses. But that's not all. It's also a fantastic stepping stone into larger real estate investments. You get first-hand experience managing a property and dealing with tenants, all while building equity in your investment. House hacking also offers potential tax benefits. For instance, you may deduct a portion of your mortgage interest and property taxes, as well as certain costs associated with maintaining and managing the property. As always, it's best to consult with a tax professional to understand the specifics. Lastly, house hacking can be a form of forced savings. Each month, a part of your mortgage payment goes towards reducing the loan balance, thereby increasing your ownership in the property. Over time, this can result in substantial wealth accumulation. So, house hacking provides a practical gateway into real estate investment, even with limited funds. It's a strategy that combines living arrangements with investment opportunities, making it a smart move for those looking to enter the real estate market, one step at a time. Secondly, we have partnerships for investment as another viable option. This method is all about pooling resources and sharing risks, which can be an excellent strategy, especially when you're starting with little to no money. It's a bit like going on a road trip with a friend. You both share the driving, the fuel costs, and if any unexpected detours crop up, you're not alone. Imagine this. If you alone can't afford a property, but you and a partner can, suddenly doors open. You're not just doubling your purchasing power, you're also sharing the risks and responsibilities. This can make that seemingly out-of-reach property a realistic possibility. Now, who could this partner be? Well, practically anyone. It could be a friend, a family member, a business associate, or even someone you met at a real estate networking event. The key here is to find someone who shares your vision and is willing to invest in it. However, it's not all sunshine and rainbows. Partnerships, like any relationship, come with their unique set of challenges. This is why it's crucial to have a clear and legally binding agreement. It's a bit like drawing a map before setting off on that road trip. It outlines who does what, covers how profits and losses will be divided, and sets out the procedures for resolving disagreements. Also, it's worth noting that successful partnerships are built on more than just money. They're built on trust, communication, and shared goals. So before you dive in, make sure you and your potential partner are on the same page. Discuss your investment strategy, your risk tolerance, your long-term goals. The more you talk, the smoother the journey will be. To sum it up, partnerships for investment can be a powerful tool for getting into real estate with little to no money. It's all about combining resources, sharing risks and working together towards a common goal. Through partnerships, you can leverage others' resources to make your real estate investment dreams come true. Our third and final method is real estate wholesaling. Now, this might sound a bit complicated, but bear with me, it's simpler than it seems. Real estate wholesaling is a bit like being a matchmaker between property sellers and potential buyers. Here's how it works. First, you enter into a contract with a home seller. This simply means that you and the seller agree on a price for the property. But here's the catch, you're not actually planning to buy the property yourself. Instead, you're going to find someone else who's interested in buying it. Your job is to find an interested buyer. This could be anyone from an individual looking for their dream home to a property investor searching for their next big project. You might be wondering how to find these buyers. Well, there's no one-size-fits-all answer to that. It could be through networking, advertising, or even good old-fashioned word of mouth. Once you've found this buyer, you then transfer the contract to them. Think of it as passing the baton in a relay race. You've done your part, and now it's their turn to cross the finish line and complete the purchase of the property. Here's where the magic happens. The profit you make from wholesaling comes from the difference between the contracted price with the seller and the amount the buyer ends up paying. You've essentially created value by connecting the seller with a buyer they might not have found otherwise, and you get to pocket the difference as your reward. It's worth noting that, like any other business venture, wholesaling requires dedication, time, and a knack for negotiation. But the beauty of it is that you don't need a hefty bank balance to get started. All you need is the ability to connect people and close deals. With wholesaling, you can find yourself in the real estate investment arena without owning any property. Let's quickly recap the three methods we've discussed today. First, we dived into house hacking, the art of living in one part of a property while renting out the rest. This method allows you to earn income to offset your mortgage payment, making home ownership more affordable. Next, we looked at partnerships for investment. This method involves teaming up with someone who has the resources you lack. It's a great way to share risks and rewards, but it's crucial to find a partner you trust implicitly. Finally, we explored real estate wholesaling, a short-term investment strategy where you contract with a homeowner to sell their property, then find a third party to purchase it at a higher price. It's a quick way to make a profit, but it requires a solid understanding of the market. Remember, each method has its own risks and rewards, and the choice depends on your personal circumstances and comfort levels. Remember, investing in real estate doesn't always require a hefty bank balance. With the right strategy, you can make your real estate investment dreams a reality.